Good afternoon, traders. It's Joel Elconin and Dennis Dick of premarketinfo.com with our weekly wrap up. Well, Dennis, we got one heck of a week to talk about.
Wow, what a week here. We were everywhere this week. On your weekly comments off the hop there, I got to give you some props. And actually, you were saying, we could eventually go down and test 1300 or we could meander our way back to 1350. We did
But
all
I
that in the
didn't.
last 2 days.
We 2 days. What are you talking
Well,
about?
today,
And
pretty much.
it's
Yeah.
like, we were trading at 1308 late in the session yesterday,
Yeah.
and when the rally caught. So basically, yeah, you can never. I talked about 1300 and 1350, but I didn't think we'd see almost 1360. But anyways, this was just a news-driven market, Dennis. We can talk about the technicals until we're blue in the face. But when the fundamental news comes out, people react.
They really do, and they reacted by coming in and buying here. And I think you really caught a lot of the shorts by surprise there. I mean, yesterday morning we had this whole market selling off. Bad Barclays news. We've got that up on the chart. You can see there with the whole LIBOR manipulation stuff. You had J.P. Morgan coming out that their losses from the whale trade might be as much as 9 billion. So much bad news. I think everybody came in with their shorting shoes on, selling this market, and then we started to pick it up in the afternoon when Merkel announced that they were canceling that conference, and then all of a sudden we were taking off.
Yeah, I like the way the street interpreted that news, that she called off the conference as good news, because one could interpret that she was even taking more of a firmer stance. But let's just get to these. Let's just talk about the banks. I mean, the banks have not really rallied like the general market has since we made our lows in 2009. And now we got the European banks part of the situation. Barclays just really seemed to be in the news.
Yeah, Barclays with the LIBOR stuff. I mean, what's interesting today, though, they could not rally even today. Here we are on a day, we're up 35 S&P points. Barclays actually closed near the low. You can see down here at $10.30. Just an awful day for Barclays considering how much the rest of the market was up. The entire banking sector was up strong, but Barclays and JP Morgan both were weak on the day. JP Morgan actually closed down on the day as well, 35.73. So wow, just ugly day for those two banks. Because when you take a look at Goldman Sachs, Goldman Sachs had a great day here, up $2.37. Morgan Stanley closed strong, closing right up near those highs that we set at 1459. That Morgan Stanley right there, that old 1450 resistance area we were talking about.
Yep, and now it could act as support. I think if you had to, dip your toe in the water in any of these financials, just going on the premise of the stocks returning back to prices in 2008, 2009, Morgan Stanley would be your number one candidate. You buy it in this area. Of course, you have the lows of the move at $12 and below that. They also have a really black eye from the whole Facebook thing. The only thing to keep in mind is they are getting rid of that Smith Barney unit. I'm sure that wasn't a great investment, but just keep an eye on that 1450 area in Morgan Stanley.
Another one just to talk about, Deutsche Bank. It had a really good day today here, bouncing back after yesterday had made a new low on the move. We were getting concerned. I got a little egg on my face saying I wouldn't want to be a buyer of these banks, even though yesterday morning I think I was saying that. So I was nervous too with the banking sector overall, and obviously it just took off here. Deutsche Bank closing up $2.29 today at 36.17. What a move for that stock.
Yeah, I guess the only thing I'd want our listeners to be on the lookout for is that, the futures went up, the general stock market went up today, but whoever owns these banks or people making new investments in different sectors, these stocks are nowhere near the levels when our market topped out in March and April. I mean, Deutsche Bank was a $52 stock then, so. Yep. I don't want to, rain on today's. I know because you're continuing with your bullish thing, but the folks, the institutional investors, have not moved into these bank stocks yet.
Yeah, I think most of the volume, it was lighter volume today still, despite the rally, and I think this volume was for the most part short covering. There was a lot of people caught short, but like I was highlighting in a piece today, short covering can lead to a market bottom. They're the first participants to start a rally because they have nothing to lose by buying. They're either covering a position or trying to take their gains, so or limit their losses for that case. So that's why the short covering is always the first thing to start a market rally, and that's what's happened. I think today, and I think yesterday afternoon and today was mostly a short squeeze where we really squeezed a lot of shorts. But let's look at a stock here, Joel. I just want to talk briefly about some in the Big Ten. Procter & Gamble, because RBC came out here on Wednesday morning. Was it Wednesday morning? Yeah, Wednesday morning, and they downgraded the stock. And we were saying on the show, and I'm just going to play you a clip actually. Just hang on 1 second. I'll play you this clip from what we said on the show. Procter & Gamble, just wanted to highlight, getting another downgrade. All these analysts were upgrading this thing at 66, 67. Now they're all downgrading it at 59. I think they've got it backwards here. And that's exactly what happened. They do have it backwards here, where they've been upgrading. They were all upgrading this Procter & Gamble stock. If we go out to the daily, multiple upgrades when it was up there in the 65, 66, 67. Now we've had 2-3 downgrades here since it's been under $60, and RBC couldn't have called it worse actually, because they downgraded it. The price when they downgraded it.
You know why?
Why?
It was because what is a Canadian brokerage firm doing rating U.S. stocks?
You're going to pick on the Canadians. Maybe those Canadians don't know what they're doing. Maybe they should just fade all the Canadian bank upgrades and downgrades, and maybe we'd be rich, Joel.
Could you design a strategy for that?
Yeah, maybe design. That's the next big algorithm. Yeah, we'll design an algorithm to fade all the Canadian brokerage calls, because they had this one dead wrong anyways. The price was $59.29 when they downgraded it on Wednesday, which you can see right here on the chart. And the stock's been straight up $2 since then. This is a monumental move for Procter & Gamble, so they couldn't have got it worse there. I mean, we did call them out on the show, so I'll give myself some props on that one, because I figured, Procter & Gamble just wasn't going down on the last couple of downgrades, and the value investors turned around, and obviously the market helps to make the bottom here happen too. But even that day when that happened, the market was actually, I think, quite flat that day, and Procter & Gamble actually started to rally.
Yeah, Procter & Gamble, it's a stock that we highlight in the Big Ten a lot, and one of the similarities between Procter & Gamble and J&J and AT&T and your more defensive stocks, which besides Procter & Gamble have been doing pretty well lately, is a lot of them make a lot of technical formations, whether it's due to a large institutional bid and the HFT activity around it or not, but it makes definite patterns. And one of the patterns I went for a head fake for was all these lows at the $61 area. I thought, man, that was the bottom, and I did make an investment in that area. Fortunately, it was some calls, so I could take the heat. But now it's come down and it's made another formation here at the $59 area, basically a triple bottom in this decimal Latin world. So there's a lot of gaps for this to fill on the upside. This one that may have some potential, and you definitely have a reference point. Even if you're entering at these levels, the $59 area would be, you wouldn't want to be there if it's trading $58.99.
Another one that you had a good call, I'll give you some props this week, was on Nike, Joel. I'll bring up the 5-day chart for our viewers to see. Don't have the clip for you, but I know what you said there. You were saying if this stock, this was actually just from today, you were saying 86.20 was a huge number on that. I think you were highlighting this low from, where would you find that low, Joel?
Actually, Dennis, that call, and it's something, and I want our listeners, when I say a stock that's had a big drop is consolidating, and what basically happened in Nike, I think it made like a pre-market low of 84.35.
Okay.
But what happened since that 84.35 is it was just on a very steady upclimb. And just, not a big spike or anything, but it's just like, someone that's been short this stock for the last 6 months, they were nibbling. And it had a real steady incline, and the top of that rally was at 86.20.
Okay.
And so I just figured that's where the pre-market sellers were going to be exhausted.
Yeah.
And there was a buyer out there. I mean, and that's another thing too. I'd like our listeners, when we talk about these pre-market levels, Nike never reached the level that we talked about. And it's a good parameters to use in the trading session. But when you looked at that 86.20 and it was already $2 off the low, there was some potential for a pop, and then they come to your whole number theory, Dennis. They got it all the way up to 90.5. Well, not the whole number, but the half whole number theory. Then they pulled back.
Yeah, and the 90 actually did round out there and then did pull back. But you were saying if it got back, the props I was going to give you because you said on the show, and I don't have the clip, if it gets back up above this 86.20 area, it's got some air to run, and that's exactly what it did. So it was a good call on your part there too. It wasn't all good calls from us this week though. ExxonMobil, I don't know if I made a call on this, but I had a trade in it, and it really didn't work out for me. I mean, we can't always have good trades, so it's about cutting your losers when you can. Now people look and say, why did you cut this loser? Because it could have really worked out. Well, if we actually go out a little bit farther here, I'm just going to change the chart to a 10-day chart just to let you see what I'm talking about here. Bear with me. There was this gap down day on the Russell from last Friday, which would have been the 22nd. ExxonMobil gap down 50 cents on the close. That was an order flow gap down. So I figured there was about 50 cents there that was just from order flow. So I figured that it might actually try to rally that back. Now we opened way down on Monday. So I figured ExxonMobil should open up probably around 81.50, compensating myself for this fair value call, which is all a little bit complicated, but the gist of it is I try to estimate what I think the fair value of ExxonMobil is. I estimated around 81.50. It opened at 81.17, so I get filled on the opening print, and boom, it went straight down on me. So I was dead wrong on that call. I hedged a little bit with Chevron, but I had to actually get out of the position and take my loss. And if you look, if I would have held it, I'd be up over $4 now. So you can say, oh, that was a terrible sell. Well, no, it wasn't, because you don't know where these things are going. And actually, I sold it and I ended up losing 40 cents. It actually would have went over $1 against me. So maybe the error is not to re-enter the position after it came back up through 80, but you just don't know. When stocks are breaking down, you just got to get out no matter what. You can't always be right, and you can't say, oh, I wish I would have held that. I think I still did the right thing, even though obviously if I still had it now, I'd be way up in the position.
Yeah, I mean, it's we'll just take a look and at the weekly outlook, and we'll give you a little bit of a preview. But this 80 to 85 range has definitely been very interesting for the stock, and certainly if it could hold 85 here over the next few days, has a chance to go back up and finally take out that 52-week high around $88.
Yeah. Another call, though, that we had that was a good one here was on Dollar Tree. I think this was your call, actually, if I'm not mistaken. Just going to bring up the chart here again from a few days ago. But we had, who was in the news? Family Dollar? Yeah, it was Family Dollar that was in the news, and Dollar Tree was down in sympathy. And what you had said was if it takes out, what was your, here, I'm just going to play the clip, actually, and then we can analyze it.
Yeah, looking at this, it's a pretty scary area here. You had it low on June 7th at 52.29, currently trading right in that area. But if that doesn't hold, this thing's going to 50.88 in a heartbeat. There's just nothing underneath this 52.29 level.
That was a great call there. You called it almost to the button here. You said if it went under this 52.29 level, it's going to 50.88 in a heartbeat. Here it is. It did exactly that. Went under that 52.29 level. Fell. Got down to, what was the low there? 50. Do you have the low?
69.
50.69. So, man, you couldn't have called that one better. You called this entire move here. It all happened in the course of about an hour and a half. So, great call on your part there on the Dollar Tree, Joel. Obviously, the stock's come back since then, but you could have had a nice little short trade off of that if you were listening to Joel's call there on that one.
Well, it did, Dennis, and this kind of goes back to our old days in the trading rooms where if there's news on a stock, like there was news on Family Dollar, you're going to have some big time competition in Family Dollar, right? Because that's where the news is. The institutions are going to be there, and there also are stocks are related to that in the sector. So that was just kind of like, well, hey, if I don't want to mess with Family Dollar, let's see what happens with Dollar Tree, and that happened to have a good technical setup. So it's just, I think the most important lesson is when there's news on a stock in your sector and you don't feel like playing the hot rod, there are different stocks in the sector that may have, we call them a sympathy move, right?
Yep. Yep, that's what we call it. And that's a good way to play some of these stocks sometimes too. It's not always the thing to play the leader stock. Sometimes it's good to play the laggard stocks. Although on Nike today some of those didn't work. Like I think I was saying on Foot Locker this morning, so I can throw a little more egg on my face here. I'll throw a little more egg on my face here. I thought Foot Locker might open up at the highs. It didn't. It opened up at the lows. So I really couldn't have been more wrong on the Foot Locker. It opened up. I figured if it opened, flat or up slightly up, I figured sellers might come in because Nike was way down. Didn't happen in Foot Locker. If things went straight up, I'm dead wrong on that one.
Yeah, good thing of the 428 stocks you traded today. Good thing Foot Locker wasn't one of them because you would have gotten your foot in your locker.
I would have on that one. I'm glad I didn't trade that one.
But anyways, it's Friday at 5 o'clock. I'm sure people want to get started on their barbecues, but we did have a very impressive close. The rally continued. I was a little bit skeptical until I read your blog at 107 that said, don't fight the tape. This market's going higher. Lo and behold, we rallied another 10 points. Can this continue?
Yeah, maybe it can, maybe it can't. It's so hard to say. Here we were, it was the end of the quarter. You definitely you knew, and this is why I blogged this at 1:10 this afternoon. I said the rally's going to continue at least into the close because there is no way in the world that and all your big guns are going to let this market close down or give these gains back because they wanted the market to close strong so it looks great for their clients' portfolio statements. They have all their statements they have to send out to their clients at the end of the quarter, and it looks great right now because we closed right near the high. So it was predictable for that reason they were going to try to drive this market higher. You had the short-term traders thinking, maybe fade this move. They were dead wrong, and the market kept rallying. Now, you have a new quarter Monday, so a lot of new stuff happens. Who knows with Europe over the weekend what can happen? But short-term here, obviously that's what transpired today. Going forward, you just got to play the numbers.
Right, and they certainly, on this window dressing, they definitely dressed up the market with the help of Miss Merkel and company, but we won't get into our conspiracy theories today. But just to close, this 1355 area was some highs that we had, believe it or not, just back on June 19th and 20th. We did close above some very major resistance here. So Sunday night when I fire up my computer, I'll be keeping an eye on this 1355, and we'll be back with you on Monday.